Who would have thought that buying something now and paying for it later was a form of credit? The government now wants to change the laws so that buy now, pay later companies have to lend more responsibly. And that led to steep falls in the share price of Zipco and Block, the US company which owns Afterpay. And Tyro Payments, a company which makes EFTPOS machines, plunged by more than 16% after a private equity firm poured through Tyro's books, got nervous and decided to abandon its takeover bid for the company. Now, some of these payment companies have seen their share price plummet by more than 60% in the past year, and that coincides with central banks lifting interest rates at breakneck speed and a cost of living crunch plaguing consumers. Overall, it was a cautious day for the All Ords, which slipped by 0.3%, with concerns about the US debt ceiling weighing on the market. Meanwhile, President Joe Biden's economic advisors have put out some pretty bleak forecasts. If Democrats and Republicans reach a last-minute spending deal, there could still be up to 200,000 job losses by September. Or, if there's a protracted default, they're estimating 8.3 million job losses, a 6% plunge in GDP, and a big rise in unemployment. In other words, a recession. Across global markets, Wall Street fell slightly, while Asian markets were a little bit higher. The Aussie dollar slipped to 66.4 US cents, while in commodities, oil prices fell and gold is steady at $1,976 US an ounce. And that's finance.